Well, good evening, all. Ira Epstein. Here we are with your financial market wrap-up, and this wrap-up is for Columbus Day. Yeah, it's October 14th, 2024, about 6:45 p.m. Central Time. Sorry that I couldn't see you over the weekend and put these out, but my allergies kicked up so bad that I couldn't do even 5 minutes of talking without hacking myself through it. I'm waiting. I've got on my turtleneck. I'm waiting for the first frost, which is supposed to be in Chicagoland this week. And that will gradually put an end to this, and everything will have fired up and the leaves will start falling and so on. Then we're going to go back to the 70s. So daytime, it's gorgeous. If you've never visited Chicago, people don't realize, they like the summer. This is the best time. Chilly at night. Absolutely gorgeous during the daytime in the 70s, all the cafes open, everything that you'd want to take in the city life, and the crowds are gone. So it makes it quite beautiful. All right, let's talk a little bit about things that I want to cover. And one of them will be, as we get to the end here, my charting course, and I'll get into that with you. But right now, what we get in the morning, because today was Columbus Day, there were no government reports out, is we're going to get the New York Empire State Manufacturing Survey at 7:30. If you'll recall, last month it came out a whopping 11.5 number. It went positive by bonkers. They're looking for it to come in about a third of that right now. Redbook Group will come out with their U.S. retail sales, and they've been stellar. They've been every week up 5.5%, just continue to show growth. Then when we get over to the markets, and I want to come back to the charts, what took place over the weekend was a lot of confusion. As you know, China came out, I think it was last Tuesday, with the Planning Commission statement, and the market tanked. Chinese stocks fell apart because no one's getting any facts. So they figured they'd put out the vice premier, and he came out on Saturday, talked about everything, but again, he offered no facts. So it's a tale of two different worlds here. In Beijing, they liked what they heard, and iron ore stayed up and copper stayed up. In the West, we didn't like what we heard because there's no facts. We don't know when this is going to kick in, how it's going to kick in, everything of that accord. My guess is that somewhere at the end of October, early November, we'll get the facts and figures, and I think what they're going to allow to happen in a nutshell is they're going to allow China to refinance the debt in the local, we'll call them authorities, which are the local provinces that make up China. And that money is going to be refinanced, able to then the banks borrow and lend out to finish up some infrastructure and to finish up probably some housing projects. I don't think they're going to allow new projects to be built until the old ones are gone, and it'll go by province as they go through that. We've already seen that they're lowering the mortgages that have to take effect by October 31st. We've seen that non-locals can buy property in different areas. I think they're trying to tie everything together. But until we see the fact, you get into markets like copper, they're back to the 440 level. You'll say that's pretty good, and it is. But remember, they were 480 2 weeks ago off of all this talk of Chinese stimulus and where the markets would go. The other event that's taking place is energy prices are getting hit, and getting hit rather hard. Why? Because I think the Biden administration has convinced Israel, with all the might we have for arms and everything that Israel needs, to go about their attack on Iran in a different manner. Number one, out of nowhere, we're giving Israel a THAAD system that'll start being deployed as early as tomorrow. Number two, the Biden administration said they've walked away from negotiations and they're just going to let things play out in the Middle East. Well, that's a sign that behind closed doors that we're not supposed to hear anything from, some deal's been struck. And it's probably that the U.S. is going to give Israel more things to defend itself from attacks from Iran, but they want to cap what's going to be there. I mean, Israel's going to attack. They have to because they were hit again. And what they hit is the key. What they don't want to see, and I think that's what you're seeing in oil, is Israel hit nuclear facilities. Number one, I don't know if they have the bomb to do it. And I don't know that we do. I saw that one go off in Afghanistan that was a monster, but I don't know what it will do against this nuclear facility. Number two, I don't think in front of the election, November 5th, that the Biden administration wants to see $100 oil if Israel takes out the infrastructure of oil. Yes, it could be rebuilt because oil's in the ground. They're not going to be able to do anything about that. But it would still give a jolt to the market in the short term until everybody could figure out how do they make up the difference. So some deal here, I think, is being made, and that's what's taking this down. At the same time, the dollar's been on a tear against foreign currencies to the upside, and the gold market has pretty much stabilized right here. So that's my thinking on the market. Do I know if I'm right? I don't. I'm not part of that closed door. What I do know is that you're up at a new all-time high in the S&P, and this is following, to a degree, what the seasonals normally do. But to a degree is a big word. We didn't get that September break. I don't count the intra-month that it went down and then came back. September wasn't the big breaking month, period. Generally speaking, as you come out of September, and I pointed this out, around October 10th, the market starts taking off. Now, what we have to be on the lookout for is what happens a week before the election and after the election. That is what you've got to look for to see, and I'll start covering that for you in the next meeting or two here. What we can say is that the market, as you can see, keeps crawling to new highs. The pattern is bullish. You have higher lows on the breaks, higher highs on the swing line, and I teach this in my charting program. The market also held another very important test of the 18-day average of closes and moved to the upside, and now it's over the upper Bollinger Band that only stays over that 5% of the time. Is the market geared for a Tuesday reversal is another thing. The theory goes from a Yale Hirsch Trader's Almanac that if you have a strong Monday in stock indices, you tend to pull back on Tuesdays. We'll see if that turns out to be the way it goes. You're up about 4 points in the early evening trade, and you are overbought. You're not embedded. Very important. In the NASDAQ, you're right back to the upper Bollinger Band, overbought, trend up, same thing. So I can see that we could get a Tuesday reversal. Would I play for it? Of course not. I'd rather see the markets embed and then lock in that slow stochastic reading, and it keeps going up. I am a bull on the market. I have said that to you. I think that you will make even higher highs with the Santa Powell reading, not Santa Claus, Santa Powell, because he'll be there one way or the other to probably cut interest rates at least one more time. I don't know if they'll do it in November or not. That has got me now sitting on a fence post. Most traders think they will, but I haven't seen the data where they should. I'm more with Fed Governor Waller today, who said, hold on, folks. We're getting a few surprises here. Maybe we shouldn't be cutting the interest rates. And he pointed out that you're probably going to lose 100,000 jobs because of the two hurricanes that came in. Inflation, though, is not breaking down. So we will see. It's going to be an interesting story. Look at how you're back up right into the resistance in the Russell. So the big rally happened today. You're following through and be a little, actually it was Friday and today, and the market is starting to react because you're into the Bollinger Band area. Now this break, I've been wondering, why is this break taking place? First of all, this is an embedded bearish reading. So rallies tend to get sold on that when they occur. Has one occurred? Absolutely not. You had one bounce on the market Friday, you fell apart again today. Is a one-day bounce a rally? I don't know if it is, but the market is still very much in the bear camp. Ask yourself this. If Trump wins, is that bullish the dollar? The market thinks that would be, and that's why the dollar has been going up and interest rates going down. Conversely, if Harris wins, which is thought to be a weaker dollar with Biden policies, what would happen? Well, we're not seeing the interest rates up. So that is how I'm approaching the market, trying to figure out who means what to the marketplace. But all I've seen is since the Fed cut at the last meeting interest rates, the market has done one thing. It has gone down. So remember, when futures go down, it means that rates are going up. It's an inversion market to it. And the dollar has gone up ever since that. You go back again to when we cut the rates. So I keep asking myself, why is this occurring? Because the market, is wrong. The market is pricing in all these rate cuts, and why would you cut if the economy is so strong? And that becomes the big question. In the euro currency, if the dollar's strong, this is weak. And now we're going to get right at I think it's coming up at us now, the next decision by the European Central Bank. They look like they're going to cut. I mean, the economies need help in Europe. We're the opposite. We just keep firing on so many cylinders. British pound's been under pressure. Why? Well, now they're trying to figure out, hey, if we raise taxes too much, do we drive business out? What are we going to do? It's a big problem for the new prime minister, and which way does he want to go with all this? This is not an easy task for him. So you've been in a downtrend. I happen to think the first support's going to show up very solidly at 129.54 to 129.32 if it breaks any further. But with an embedded reading under your belt, you're still looking for lower prices. So down there, support, and then it might be able to work even lower. In Bitcoin, you have a market that's come down. Now, do you remember, I think it's called Mkts, when they went broke and they had all these Bitcoins that are ready to be sent back to people? We're talking billions in this of value. Well, apparently, instead of releasing, they pushed back the date when all this is going to happen, and that means there's no flood of Bitcoins coming onto the market, and I think that is very much what is going on here. As we look at the energy market, if you're not going to attack the oil fields in Iran, you've got a weak economy in Europe. We have no deal that we know what's going to happen in China at this point. Why did you get up to $80 a barrel oil? And you're suddenly back now to 75. Why not back in here to the 70? I can make that argument. And same as in WTI, it got dragged along. It's getting under the 18-day average of closes of 71.37. I can make an argument for the mid-60s in this oil based on this chart action. When we look at heating oil, well, this makes sense to pull back right now. You don't have any real cold weather. The market, I think, got ahead of itself and showed you up there that, what I would have told you, the first challenge of a 100-day average in a Bollinger Band, the pros are coming out. You're not embedded, and that's exactly what I would have said. And in nat gas, I think I've been telling you I'm ultra bearish. Yeah, ultra bearish on this market, but not here. Here's your profit-taking zones. This was where I said, I think this market's going to peak out. And lo and behold, it did. I didn't expect to see it just go in a straight line down, in all fairness, from 340 to the 290 level. If you think I saw that coming, thanks for giving me the credit, but I didn't see that coming. So you put this all together, you try to come in with where's your game plan, and it's pretty much what I'm saying on these charts. I think it's going to get very interesting right now. I think it's been hard to trade for a lot of the markets other than just holding on the long positions. And the easiest positions have been the ETFs or NVIDIA or other markets that keep going up like that. But it's been a difficult market and a lot of whipsaws for energy traders. I think they're sitting there with some of their teeth knocked out. I'm Ira Epstein. I want to remind you, if you're interested in learning the techniques I have here, swing lines, moving averages, slow stochastics, Bollinger Bands, and window envelopes, you can do so in my charting course. All you do is go to iraepstein.com, go to the word courses. It's right there for you. Read about it. You get my morning videos, you get my full research, 45 chapters. Each chapter has numerous videos, so there's quite a bit of time involved in this. And you will walk away going, I get it. I can apply it. I know what he's talking about. And it gives you another trading tool. iraepstein.com, or move your cursor right up here, and I'll talk to you all tomorrow morning.